Hello everyone, welcome to my channel. Today I'm going to talk about how long you can actually owe the IRS. Owing money to the IRS can feel overwhelming, especially when penalties and interest continue to grow over time. One of the most common questions taxpayers ask is, how long can you actually owe the IRS before the debt goes away? The answer depends on several factors, including whether you filed your tax return, the type of debt you owe, and whether you have made arrangements with the IRS. While many people believe tax debt lasts forever, the IRS does have collection time limits in many situations. Understanding these rules can help you make smarter decisions and avoid unnecessary stress. The IRS collections statute, the 10-year rule. In most cases, the IRS has 10 years to collect unpaid taxes. This is known as the collection statute expiration date, CSED. The 10-year clock generally starts when the IRS officially assesses the tax debt. After you file your return and the balance is processed. Once the 10 years expire, the IRS typically can no longer legally collect the debt. However, this does not mean you should ignore IRS notices and simply wait it out. The IRS has powerful collection tools, and certain actions can extend the collection period. What happens if you do not pay? If you owe taxes and fail to pay, the IRS may begin collection efforts that include penalties and interest, tax liens, wage garnishments, bank levies, seizure of refunds. The longer the debt remains unpaid, the larger it can become due to accumulated penalties and interest. The 10-year clock can be extended. Many taxpayers are surprised to learn that certain actions pause or extend the IRS collection timeline. Common situations that may extend the 10-year period include filing bankruptcy. When you file bankruptcy, the IRS collection clock is paused during the bankruptcy process. Second, applying for an offer in compromise. If you submit an offer in compromise, a settlement request, the collection period may pause while the IRS reviews your application. Third thing is leaving the country. Living outside the United States for extended periods can suspend the collection timeline. Fourth thing is requesting collection appeals. Certain appeals or collection due process hearings can temporarily stop the clock. These delays may add months or even years to the IRS collection period. What if you never file taxes? The 10-year rule generally applies only after the IRS assesses the tax debt. If you never file a tax return, the clock may never start. In some cases, the IRS may file a substitute return on your behalf using information they have from employers or financial institutions. However, these returns often do not include deductions or credits you may qualify for, which can increase your tax bill significantly. Failing to file taxes can create long term problems because the IRS may continue pursuing the debt indefinitely until a return is filed or assessed. Penalties and interest continue growing. Even if you enter into a payment plan, penalties and interest may continue to occur until the balance is fully paid. Common IRS penalties include failure to file penalty, failure to pay penalty, accuracy related penalties. Interest compounds daily, meaning tax debt can grow faster than many people expect. IRS payment options. The good news is the IRS offers several ways to resolve tax debt. Installment agreements. Monthly payment plan allows taxpayers to pay balances over time. Second thing is offering compromise. In some cases, the IRS may settle your debt for less than the full amount owed if you qualified financially. The third thing is currently not collection status. If you cannot afford payments, the IRS may temporarily pause collection activity. The fourth thing is penalty abatement. Certain taxpayers may qualify to have penalties reduced or removed. These options can help make tax debt more manageable. Can the IRS forgive a tax debt? The IRS does not typically forgive taxes simply because time passes. However, once this statute of limitation expires, collection efforts usually stop. Additionally, programs like Orphan Compromise may reduce the amount owed under certain conditions. The IRS evaluates factors such as income, expenses, assets, ability to pay. Taxpayers experiencing hardship may have more options than they realize. Why ignoring the IRS is dangerous? Some people avoid IRS notices because they feel anxious or overwhelmed. Unfortunately, ignoring tax debt usually makes the situation worse. The IRS may file tax liens against your property, garnish your wages, levy bank accounts, offset future refunds. The earlier you address the issue, the more options you typically have available. How to handle IRS debt wisely. If you owe the IRS, consider taking these steps. File all missing returns. Even if you cannot pay immediately, filing a return is essential. Secondly, review your balance. Request transcripts or review IRS notices to understand exactly what you owe. The third thing is explore payment options. The IRS often prefers payment arrangements over aggressive collection actions. The fourth thing is work with a tax professional. Tax professionals can help negotiate with the IRS and identify the best resolution strategy. My final thought on this is, so how long can you actually owe the IRS? In many situations, the IRS has 10 years to collect tax debt after it is assessed. However, that timeline can be extended depending on your actions and circumstances. The most important thing is not to ignore the problem. Tax debt rarely disappears on its own, and delays often increases penalties, interest, and financial stress. By understanding your rights, exploring payment options, and taking actions early, you can regain control of your finances and move towards resolving your IRS debt with confidence. Thanks for watching the video and do not forget to subscribe to my channel.